Hey, what's up, guys? Leo. If you found the content valuable, hit the like and subscribe button for the YouTube algorithm. So let's go ahead and dive in here. A lot of people have been asking me to cover this. Essentially, there is a massive short position on Ethereum right now, and we're looking at a chart here from the CME group. This is going to be the Ethereum futures contracts, and obviously, you look at this chart and you can just see this massive short position that they built up. But what does this mean? What's going on here? Because it says a negative 11,341 down here in the green. So what does that mean? So some of y'all might not know this, but I used to be a futures trader, and I did it so for many years. And a futures contract essentially it's a basket of a lot of Ethereum in this case. So one contract is basically holding 50 Ethereum worth of value. That's what it represents. It doesn't necessarily mean that they're holding it in a spot market because it's not a spot futures contract. So in this case, this is going to be about 567,000 worth of Ethereum in a short position, or about 1.5 billion. So a couple things to note here. They have increased this short position 40% just in this past week, and I think that is due to hedging. So we come over here to look at the chart. You notice that we have this long-term trend line here, and we're just sitting right on it. So a portion of this short position is likely traders that have long positions, and they are piling into a hedge. If the market breaks down, the loss isn't going to be as painful for them. But kind of going back to the 1.5 billion worth of Ethereum short position, to kind of put that in perspective, we're looking at this is far side investors. It's just something that I use to keep track of the ETF flows for Ethereum. If we come down here to the bottom, the total ETF flows, the net is going to be 3.1 billion. So this short position is about half the size of the entire flows that we have seen go into the Ethereum ETF so far. Now, a lot of people have been kind of asking me, what do I think is going on here? Kind of on the lines of just, not really conspiracy, but just kind of speculating as to why the position has gotten so big. Is the market about to crash? Are we about to move into a bear market? What's causing this? So I think there's a couple things that are likely. I think part of it is that people are hedging short positions that they have long somewhere else. There's also people speculating that institutions are trying to trigger a short squeeze, like they're manufacturing one by positioning themselves to be really short and then just letting it go. Because basically what would happen here, because the futures markets indirectly affect the spot market. So for example, if I buy a futures contract, it's paper. It's a derivatives market. It's deriving its price from the underlying asset being Ethereum. So if a stop order gets triggered in the futures market and the price deviates upwards, but the spot market's not really directly affected, what ends up happening is that people see the discrepancy, right? So they start seeing that, the spot market's skyrocketing. And so people start to buy in the spot market to make up the difference. Or at least that's kind of the mechanics anyway. In my opinion, the reasoning behind it doesn't really matter. The fact is that the short position is there. So I want to take a look at the chart real quick. So if we come over to... Here we are. We're looking at the Ethereum's futures contract. So you'll notice we have this really long trend line that's been here for multiple years now. And so we're sitting right at that resistance point. And this is a resistance for multiple reasons. You have structural support here where you can see that, as price tried to break through it going higher, looking horizontally here, just this price region at 2650, you'll notice that price had trouble getting through, right? So that's what we call structural demand in price action trading. And now we're kind of coming back to it, and we're just sitting here. It's also at the confluence of this long-term trend line. So I think that's why a lot of people are hedging their bets here, because if it goes down, okay, well, now they've lost a big portion of their capital. But if they have a hedge, they try to make it a little bit not as bad. But what's interesting here, I want you to take a look at, give me 1 second, I'm going to zoom in here. Okay, so now we've zoomed in. So this is one of the trades that I would look for whenever I was trading futures, and that is that the CME gap will more often than not fill. So what do I mean by that? Well, the prior day, it closed here, closed at 30, looks like 30, we'll call it 33.50. So the price closed there, and then the price gaps down, meaning that while the futures market was closed, price moved way down away from it. And so we call that the gap. So you look at where the candle body closed, and then you look at where the gap reopened down here. So we have this big space that needs to get filled. So it's very likely that price will at some point come back up and fill it. I believe that some traders had looked at statistics, and I want to say it was that the gaps will fill on the Bitcoin. I'm not sure about Ethereum. I would imagine it's the same, because it sounds like it's the same for futures contracts in general, but it fills within about 63 days. So that puts it about mid-April that we could, sometime between now and mid-April, that we would see this gap fill most likely. What's interesting to me here is that, so we can actually see this short squeeze on the chart, and a lot of people don't realize this, but if you look over here on the right side, these little volume bars, this is showing you volume by price, as opposed to showing you down here at the bottom, you see volume by time. So for example, like one candle body here had a whole lot of volume versus over on the right side, you'll notice that there's a lot of volume here between 3,600 and 3,200. And so what this is showing you is, you can think of this as areas of price acceptance versus price not acceptance, where people don't want to trade. There's not a lot of liquidity, not a lot of volume. And so we're sitting down here at support, very strong support in my opinion, where we have a high volume node. That's what you would refer to this as. And then all of a sudden volume drops off. And so we end up getting in this area where there's not a lot of volume. And so what price tends to want to do is it moves very quickly through these areas until it gets back into a high volume node. And then typically within a high volume area, you'll notice that price likes to trade within that area because price is accepted there. Traders like it within that range. And you can really see that down here below where we are from, we'll call it 2650 down to 2200. There's a high volume node here. And you'll notice that price traded within this range for quite some time before it started to move on. And so if we're getting into a situation where there's going to be a short squeeze, let's say that these CME futures, as price starts to move up, they start triggering, it could push price all the way up here and fill the gap. And I think that would happen very quickly once it starts, just because of the lack of volume here. You'll notice that when price in the past has moved through this little lower liquidity area between 32 to pretty much where we are, like we'll call it 2,700. So 3,200, 2,700, you'll notice that like price moves very quickly through that area. It does not like just hanging out there, moved very quickly through here, moved very quickly down over here, it moved very quickly up. And so this, I don't think that this is enough volume necessarily on the CME futures end to really like force it to 10,000. It's not that type of squeeze in my opinion, but it's certainly enough to force it away from this support line and push us up towards breaking out of this resistance that we have here at, what is that? 4,200. So once we get past there and we start breaking new highs, that's where there's really no price action, meaning that we're in price discovery, and that's where price can just start going vertical until it gets to a price where traders accept it. For example, so let's say we get our short squeeze here, it pushes us away from support, right? So we're kind of out of the danger zone. We get up here where price likes to kind of trade around, might mosey around a little bit, work our way through, break through the resistance around 4,200, and then price just keeps going. And then maybe let's say that it gets up to, 7,500, and maybe the traders like it there. And so it establishes a new area of price acceptance and support around that price. That's not a real target. This is just an example of how price action works. Something else to note, there's been some talk that Binance has sold pretty much all of their crypto holdings. So the Cointelegraph reports that Binance sold 94% of its Bitcoin reserves, 99.9% of its Ethereum, and 99% of its Solana reserves in January. And if we come down here, so Binance customer sort of actually responded to this, saying that Binance isn't selling assets, that they're simply adjusting. It's an adjustment in the Binance treasury accounting process. So funds are safe. Basically, Binance isn't selling anything. They're just moving funds around. So it's kind of hard to determine how they're doing that, even if you're looking at the blockchain. I mean, they could be buying in one account that you don't see, and they're selling in another account, just moving funds around that. So I really wouldn't put much weight on it. Binance came out and said they're not selling. So I just think that's just FUD. I wouldn't pay any attention to it. So going back to the chart here, we're basically just trending around that trend line. I don't expect us to make a big move until tomorrow's Federal Reserve meeting with, they come out with the interest rates, see the inflation data basically is what they're gonna be doing. This is very typical whenever you have inflation data or like an FOMC meeting. Markets tend to pause and wait for that important data to come out before people start making really big trades, really big positions. So I would expect volatility to kick up once that data comes out. Right now, the inflation data that I've seen is showing that it's going to come in at, the CPI data is going to come at 2.85%. So kind of basically it's just a repeat of last month. It hasn't really changed. So we'll just have to keep an eye on that. I would say that if it comes in really high, obviously that could trigger us to move down, because that would mean that the Fed would have to raise interest rates in order to fight inflation. But if we get a surprise to the downside and inflation does come in lower, then markets are going to like that, because that means that the Fed can start being more relaxed with their monetary policy. So we'll just have to wait on that meeting, see what kind of happens. If you found this content valuable, hit the like and subscribe button for the YouTube algorithm. I really do appreciate it. And until next time, y'all take care.